I'm Greg Hunter. Welcome to USAWatchdog.com. Listen, it seems like eons ago that silver was $14, $15 an ounce. And my next guest, who is an expert in silver, really all precious metals and investing, and has a newsletter, we'll introduce him in a second. He said to me, he says, I don't see how I could go much lower, 14, 15 bucks an ounce. And it really didn't. I think it got down to 12 for a short while, silver, just in recent history. But, now it's, 26 something dollars an ounce. He wrote this book back in 2015, The Silver Manifesto, still totally relevant today. We're talking about David Morgan. And David Morgan is standing by in the wings here. David Morgan, thanks for joining us today on USAWatchdog.com.
Well, Greg, thanks for having me. It's great to be with you.
Well, this past week, they slammed down gold and silver. It costs a lot of money to do that. More than $100 on gold, more than $4 on silver, and it's about halfway back. I don't think that's what they were intending to do. Do you? What's going on in the gold and silver market? I know you're a silver guru and you're smart on silver, but as you say in your articles, you can't really talk about silver unless you talk about gold. So let's marry them together. What's going on in the gold and silver market?
A great deal, and I'll try to be brief. I knew we were doing this interview, so I took some notes ahead of time. And I said this back in 2002. For the record, I will state there will be another, more frenzied scramble, which will carry silver prices to highs that will repair all the excess paper money creation, price suppression, supply deficit, and bearish sentiment over the past 2 decades. This will become known as the Great Silver Crisis. Now, you have to think about when I wrote that, silver was at like $5 or lower. So your question, there is a great deal of buying pressure throughout the sector, not only in the retail market, which has these huge premiums currently, but also in the commercial bar category, which would be primarily the silver ETFs. On top of that, you've got Sprott Asset Management that has put a shelf filing together for $1.5 billion, which at that time would represent, I think, something around 80 million ounces of 999 fine silver in commercial bar form. So there's a lot of buying pressure in the silver market right now, and gold as well.
Would you say we're in the Great Silver Crisis right now? Would you say this is the beginning of the Great Silver Crisis, or are we entering the Great Silver Crisis? Talk about that. That's a great term. The Great Silver Crisis. Where are we with that?
Well, we probably are entering into it, but the way I would define it, and it doesn't make me right or wrong, but the way I think about it is the Great Silver Crisis really is verified when the commercial bar category is bought for industrial use and they panic. So when when the Apple computer or Apple decides, we can't make the 5G phone, we don't have enough silver, it's on back order, it's going to take 2 months to get it, we got to shut down our production line. And that spills over to Mitsubishi, into the electric vehicle market, spills over into a lot of electronic manufacturers when that happens. So in other words, when the industrial side, which is 60% of the market, panics into buying and has to basically warehouse it because they're afraid they're going to run out. Without having it, they're out of business. That would be the Great Silver Crisis, in my view.
How close are we to that?
We're not that close yet. We're getting closer.
You wrote that in 2002. Cliff High said that at some point with his smart guy, Cliff High, predictive linguistics. He said that silver would be $600 an ounce. It's just going to be so valuable that you're not going to be able to store it as a metal. It's going to be all used in industrial production with all the new technology coming out. And you were just naming just a few things, like the big demand for electric cars. I think Cadillac has now an electric car, and they're going after Tesla. Cadillac. So that's what you're talking about. The silver. So you see the silver demand for industrial use just really gaining traction.
Well, it has. I mean, from 2000, the amount of demand for industrial only was 35% of the total market, and we're only mining 550 million ounces of silver. Today, it's 60% of the total market. We mine 850 million ounces of silver on an annual basis. So we've increased, not double, but we've substantially increased the amount, and we've also increased production over that same time frame. So think about it. If we just had steady mine activity and you only mined 550 million ounces today, which we don't, but as a thought experiment, and the 60% of 850, so you're looking at like 500 million ounces, basically you'd have almost 100% would be used in the industrial side. But what I'm really saying, Greg, and you didn't misstate anything, is that the demand for silver as money or an investment is very strong right now, obviously. But when that spills over into the production side or industrial side, it's not because there's going to be a lot more activity putting silver together and the industrial side is going to go up to 70%. It's actually waning slightly because of the crisis. However, when the investors take up the silver supply and there isn't any left, and let's say production is lower, but if you can't get what you need to make your final product, your refrigerator, your smart toaster, all the stuff that has silver in it, all these smart items, then they're going to go into the market and buy it and find out they can't get it, because almost all of them, not all, believe in this just-in-time inventory, and there's an infinite supply of anything they want at all times. And that was proven wrong by Ford Motor Company in the palladium market. But I don't really want to go down that rabbit trail. I've done it in other interviews.
So that's just the industrial demand supply of the market, and that is increasing, and that's just the waiting for that demand to catch up with what is going on in the monetary side. I mean, people are freaked out by all the money printing. I mean, Andy Scheckman just sent me a little note to other people. He's at Miles Franklin, big outfit, good people. Bill Holter's also with him. And he said, this is pretty simple. I mean, prices are going up and supply is dwindling in the coin and bar market. The monetary investment in silver is getting tight. The supply is getting tight and the prices are rising. Now, I know we had this big slapdown, but let's talk about the supply demand of silver and gold. Oh, we're seeing increased demand. Is it because people are freaking out about the bonds aren't going to get paid off and the money creation? I mean, they're fighting over $1 trillion or $3 more trillion for stimulus here in the United States, and they're doing this all over the world. Tell me about the monetary side of silver and gold.
Okay, well, let's start with gold. On the gold side, there's two sides to every coin. Excuse my corniness, but there is obviously a lot of demand for gold and silver for monetary reasons. However, a lot of that shipment into New York, the other side of the story, all we're hearing is about imports. We're not talking about exports. The reason that Swiss refiners ship so much gold into New York, the other side of the story, is because there's an arbitrage opportunity. The refiners aren't in the business of hoarding gold. They're not gold bugs for the most part. I mean, people that work there might be, preferential to gold, but they're in the business of making money, which is currency in today's, world. So they saw an opportunity to take advantage of a price differential. So you have contango, or a stronger price going out in the time in New York, and you had backwardation in London, or vice versa. I forget which, but the idea is that there was a huge spread. So a lot of that gold got shipped to New York to take advantage of something that you could sell at a higher price. So yes, did all that gold go to New York? Yes, but it's not just because there's a lot of people panicking because of the monetary system, which of course I've founded my reputation on. I don't want to belittle, what I've said in the past, but also want to look at both sides of the coin, because I think you have to get the big picture and you got to get it correct if you're going to be a good analyst. And so the story that's really not being told very much is when you call these refiners, which I have, and I've talked to hedge fund managers that work directly with them and mints that work directly with them, is they'll tell you that there's been a lot of shipment into New York in the days of $14, $15, $16 silver and equivalent price at those time frames in gold, because there weren't many buyers. So there was stockpiling it on the shelves. So there was a lot just sitting there. Remember, all supply and demand has to equal. So if you're a refiner and you're making, 1,000-ounce bars and there's no demand, the buyer of last resort, so to speak, would be the exchanges. And so that's kind of what's taking place. That's the other part of the story. I've got an article I'll send you.
Wait. But now we have $27 gold Let me get you in here. We have $26, $27 gold, and we have, well, it was at new record all time. It's still above the old record all time high at 1950 gold. So the whole price picture has changed since then, right?
Oh, absolutely.
So, and there is the fear trade, or the people afraid of their bonds not going to get paid, or their currency is going to get. I mean, they're talking about crazy amounts of money being created. Oh, and now just in time for new digital currencies all around the globe.
Right.
But
Yeah.
tell me about that. I mean, that we're seeing some real fear for people buying the metal because they want to be protected.
Absolutely. Well, 26 is key on silver because that's where the price held for 3 times. On the fourth time it went down, and ever since silver went below 26 years ago, it's really been in a bear mode. And finally, we're back up over that level, and it seems to want to hold above that level. As we know, it went below it temporarily, I think, for a day or two of trading, and now we're back above it. So that's very key technically and psychologically. There'll be a lot more silver bought at 30 and higher than there was bought, at 18.
Yeah.
So you're right. I said, and I think the best way I can explain it, and everyone that listens to, USA Watchdog has this in their mind. But there's a point in Keynesian economics where you can stimulate the economy by printing money, and it works for a while. And then there's a point where you can just print and print and print, and it doesn't work anymore. And we've reached that point in my strong, educated, studied view.
Wow.
We're at a point now where the more you print, the worse it gets. People trust the money or the currency less and less and less. It becomes worth less and worth less, and then it's worthless or perceived to be going to worthlessness. And that's when you see an even greater demand than we're already seeing. We're just seeing the precursor to what happens. We're in the third leg up. The third leg in any market is the most substantive in price increases, and actually usually a short duration. That's why I've been on the net many times lecturing about 90% of the move comes in the last 10% of the time. When the bull market in silver started in the 70s, it went from the monetary official price of $1.29 an ounce to $6 over about 14 years. But in January 1979, at $6, an all-time high, it went from that all-time high to a new all-time high of 50 for an 800% increase in 1 year's time. So it actually went in 8% of the time, it made 87% of the move. Now, are we going to repeat exactly that? No, we are not. But the idea is very, very much the same. And this happened in real estate. It happened in the tech bubble. It's happened in almost every market. So we're just getting warmed up. And a lot of people have asked, well, is it too late? No, actually, you're the person that was buying silver in 1979, except the big difference is you're buying it with confirmation at 26, where it's barely getting to where it should have been all the time in a free market as a minimum.
Should be $50. Should have been $50 a long time ago, you're saying.
Yeah, a long time ago. So now we're at a point where you're basically buying it, instead of buying it at an all-time high and watching it go eightfold higher, you're buying it kind of halfway to the old nominal high. And let me stop there and digress a bit. If you go to shadowstats.com and you look at $50 silver in 1980 and you use the CPI numbers from 1980 and you don't distort them as they have been, the inflation-adjusted price for silver is $600 an ounce.
That's just what, wow. That's just what Cliff High keeps coming up with. Isn't it funny?
Yeah.
Cliff High keeps coming up with, I don't know why I keep coming up with this number, and I'm a terrible silver investor, and people think he's nuts, and of course he's not. He's nuts like a smart fox, right?
Yeah, right.
He's not nuts. But he keeps coming up with that number. Other people, Bo Pony keeps coming up with that number, 600, 700. Bo Pony, it's heavy. People say, what's heavy? Well, it's heavy at $30 an ounce or $26 an ounce. It's not so heavy at $500 an ounce.
Yeah, let me just dispel that right now, please. I mean, I get, silver's bulky. All things are relative, So let's just do a thought experiment and say that silver and gold are par. Okay?
Okay.
So gold's at 2,000 an ounce and silver's at 2,000 an ounce. I'm not saying it's getting there. I'm saying let's do a thought experiment. Is it too bulky when it's 2,000 an ounce? I mean, they're not the same. Gold is more dense than silver, so the volume is slightly less than in gold than it is in silver. I mean, look, all the gold that's ever been mined in the world will fit in about 3 Olympic-sized swimming pools. Okay, and if the natural ratio right now is about 10 to 1, it's been as high as 12 to 1. So that suggests that there's 30 Olympic-sized swimming pools would hold all the silver. But that's not true because so much is in the ground in landfills. Actually, the investable silver, I'm not talking jewelry and silverware, but the equivalent 999 fine bullion or bullion coins, or probably about half of what the gold supply is. So, we're looking at a precious metal, whether you believe it or not, and just because the price is mismatched to gold, doesn't mean it's bulky. I mean, look, I've got, I think you can see this. Look, that's a kilo bar of silver right here, okay?
Yep.
Not the size of an iPhone. This is worth whatever the price would be, 26 times 30, what would it be? Oh, well over $600, I think, if I did the math in my head right. Point is, I defy you to find anything in your house that's small, that has that value other than your cell phone. Unless you're a coin collector or fine art person, show me anything that's that size that's worth 30 times 30, $900, or 800.
Let's go back to this $600 an ounce thing. If you did the all-time high back in 1980 and used shadowstats.com without all the gimmicked up, inflation adjusted, substitute hamburger for steak and hedonic measuring and all the gimmicks that they have, you're saying that right now, if we're at the all-time high would really equal the $50 all-time high back in 1980 would equal $600. Talk about that.
That's exactly right. Yeah, well, I think he already did. If you look at the metrics that we used in 1980, where food and energy, the two things humans need most to survive, were not taken out of the CPI and left in, and we went with the same calculation, which is far more honest than the calculations we use now. It's a simple math problem, and $50 in 1980 is $600 right now. So for those two to match, everyone gets hung up on a number, but the number 50 that silver hit nominally in 2011, that $50 bill didn't buy hardly anything relative to what it bought you in 1980.
Yeah. Yeah, 1980, what was gas was 50 cents a gallon? And let's say $1 maybe?
All right. Well, look at it another way, if I might interject, Greg. Sorry if I talked over you.
No, go ahead. You're the guest.
My
I want you to talk.
When I was a little, 3-4-year-old, my dad made about $5,000 a year. He was an engineer working for Bechtel at the time.
Wow.
And he had a house and 2 cars. My mom didn't work, middle-class neighborhood. But all that was available on $5,000. But back then, when I was born in 53, and so 4 years old, 57, 58, 59, you still could take that dollar bill and use it with 4 silver quarters or 2 50-cent pieces. And so now take that 5,000 and put it into terms of what would you would need in fiat for a household for one person, not 2 to work, to have a middle-class home and 2 cars, and only one person works. What would that be? I don't know.
80 grand.
I want to give you the idea of the kind of inflation that's so insidious, and yet most people don't really think about it, I think, enough to realize what's happened to their money. I mean, one of the best books to read as a primer is What Has the Government Done to Our Money by Murray Rothbard. I mean, that will teach you in an hour exactly what's been going on.
So what do you make of this big smackdown that we had here just this past week, where they spent some time and money on this? I mean, they dumped twice the mining production on the market. I think I was telling you this in the pre-interview, and I brought this up in my weekly news wrap-up. Well, if somebody counterfeited double the shares of Amazon and counterfeited and dumped them onto the market, there'd be people in cuffs by the end of the day. There'd be people going to jail for 20 years. I mean, but in the silver and gold market, it's not right. They dump all, it's just fraud. I mean, they don't have double the mine production, sitting there to leverage this out and do this. I mean, but anyway, what do you make of the big takedown?
Well, it's happened again and again and again, and here we go, a repeat. You're right. They disobeyed the position limits. It's basically breaking the law, but they have done that many times. The other side of that coin is Craig Hemke pointed out is that after the Buffett take of 130 million ounces of silver, most came off the COMEX, if not all of it, eventually.
The J.P. Morgan.
Uh,
J.P. Morgan.
I'm talking about Warren Buffett back in
Oh, I'm
1990.
sorry. Excuse me. Yeah. Sorry.
So
Forgive me.
So at that time, there wasn't really a limit of how much you could take off. After that, they made what I call the Buffett rule. You could only take 1,500 contracts, which is 7.5 million ounces. But Craig on 2 shows ago, when you interviewed him, talked about he got the answer, which I look for. And thank you, Craig, that they've kind of made exceptions that in certain cases, I forget the exact words, you could actually deliver more than that 7.5 million ounces. But it shows you how interesting the market's set up. It's so favorable to the shorts. You can short, infinite amount of silver that doesn't exist. But if you want to buy real metal, you're limited to 1,500 contracts. And again, they've broken that rule too. I want to be fair. I want to be honest. But nonetheless, it's like sell all you want that doesn't exist, but if you buy it, we're going to have a restriction on you. So the most important comment I haven't made yet, and that is the strength in the market. I mean, normally when you get clobbered like that, that hurts the psychology of the market. It hurts the structure because the markets are settled in futures contracts. And usually there's some relative devastation that can take sometimes weeks or months for the market to come back. We bounced right back over 26, as we discussed earlier, which shows we're in a new market paradigm. I mean, basically, as I said earlier, the big picture is that this increase in the money supply isn't working. Most people are waking up to it. I think the bond market's the key. The bond market's still showing deflationary forces greater than inflationary forces. But you're having both. Once food prices start to double and double again, you're going to see a lot of people that want to buy, more food, and people that have some savings are going to want to get out of the bank. And the best way to get your cash out of the bank, which I get asked all the time, is don't go to the teller window and fight with them. Say, I want, I want 10,000 in pieces of paper. Simply get a hold of a decent dealer and turn that fiat into savings. Turn it into gold and silver physically, and you can do any amount. If you got 100,000 in the bank, you want to turn half of it into
wire transfer.
Real savings. Then just write that check. That's a lot easier way to move your money out of something that's a failing system into something that's lasted for thousands of years. Excuse me.
That's a good idea. Write a check, or wire transfer.
Or wire.
Yeah, and let's just speculate on the psyche for who's doing this. I mean, who would short the market to try to lose money? Who would be in the market to completely lose money? This is not what they wanted. This has got to freak them out. The market strength.
They don't want to lose money.
But their market strength. This is not what they wanted. They did not. They wanted silver to be tanking right now. They wanted it to be back to $15 an ounce. That's what they wanted. But they didn't get that.
They don't. Yeah, they want to cover their shorts. They want to win on any side of the market, and they've been winning on the short side for years and years and years. So now they do what they've always done, sell twice as much as annual mining production, drive the market down on paper, and cover their shorts and make money. Well, did they make money this time or not? Well, that remains to be determined. So I think the most important thing for the Craigs and the Mees and the Butlers of the world and others at Steer are to look at what the upcoming commitment of traders looks like and see how much they were able to escape from losing trades now. And that's going to tell a very, very strong story on where we are in the market structure, because the whole structure of this market is based on a phony paper paradigm where these banks have been able to control not only the physical market, because most of it moves through the bullion banks from the smelters into the bullion banks, or sometimes smelters direct to manufacturers, but there's only a very few that are smart enough to do that, although there are some. And so now we got to look at what is the structure of the market. And that's all basically spelled out between the bank participation reports and the commitment of traders reports. And that's something that some of us look at quite avidly. And then you've got to see whether we're building inventories or not. And if we are building them, we also have to look really deep, because location doesn't prove ownership. I mean, just because you've got a bunch of silver sitting in a warehouse somewhere doesn't mean it's that country's silver or gold. So there's a lot going on beneath the surface that a lot of people really don't think about, that's actually required if you want to get a big, true picture of the dynamics of the market. But look, we've just begun, I believe, to run to gold. the run of gold is already spilling over to the silver market because it's very undervalued relative to gold. And there's this huge opportunity for these dealers to make huge premiums on these metals, especially on silver, where certain products like Silver Eagles, for example, are selling like $7, $8 over the spot price. But yet,
some places $10.
Yeah, but I have to be fair. The market's the market. When I say the market, I mean the commercial bar market, because that's how the price is set. It's not set on the Silver Eagle. That market is tight because there's been so much transfer into the ETFs, particularly SLV. So if you want to play the arbitrage and set up a mint and buy silver off the exchange and turn it into silver coins, you could do that for. You got to pay like $1 over if you're just a normal individual such as myself. What's on the COMEX, so you can pay 26 plus $1. Usually it's just in the pennies, and it still could be depending on the amount you buy. And then you have to ship it, and then you have to manufacture it, but you could still do all that for like $3. So you could charge like 5 over and still make $2 per unit, far less than your competitors, and you would start driving the market down. This happened in 2008. Andy Schechtman got a hold of me and asked me, is there any place that I could find that could manufacture, retail silver products? And there's a place called Pyromet that I lined them up with. All they did was industrial stuff. They didn't even know the spreads really in the retail market. And they did the wire and the mesh and the shot and everything that goes in the commercial world of silver, and started making 100-ounce bars. And I don't know, they were hardly able to keep up at some point with the demand, and that was about all he could get at that time. But it looks like we're facing a similar situation now, but it hasn't subsided as quickly as it did last time. So is this going to continue on to the sunset? I doubt it. Big arbitrage opportunities. The market's pretty efficient over time, and the spreads will match, but it hasn't happened yet. So there's this large discrepancy between market price for what I want now delivered to me, and the delays are big. I want to go into that slightly.
Go ahead.
Most states say that you have to deliver within 28 days of the time your check clears, and if you don't, then you have some recourse. Well, a lot of these dealers are saying wait 45 days until I get it to you, so they're kind of in iffy territory. I'm not trying to scare anybody. I'm just reporting the facts. I mean, like some of my predecessors said, I'll report the facts, you decide. But that puts them in, what kind of a position. And they're just being honest. They can't get it in 30 days. It's going to take 45 or so.
That's a demand.
So there's a lot of, and this is at the start. I mean, just imagine what will happen a year from now with more funny money printing, or if the bond market starts to collapse and interest rates start rising, or, all these things that are ahead of us that are not likely to be very consoling to the financial markets.
Wow. And you think it's just taken off just right now? You think we're just in act one of the big crescendo coming?
Yeah, I think we're in what I said earlier at the beginning of that 1979 move where we went from $6 silver to $50 silver, or I forget, it was around 200, 250 gold if memory serves, up to 850. So we're starting that, and it doesn't mean we're on that rocket launch, because if you look at the 1979 chart, you'll get a pretty good idea. I mean, it started moving up and getting enthusiasm. It didn't go, rocket ship until the last few months. I mean, I remember being in a December contract for gold, and it was at 300, and by my birthday it was at 850. So I mean, so that was like a month. So that last month of that last year is when it really accelerated. But that's the way markets move. But you want to be able to sell in the strength. I mean, I'm getting asked, and I listen to your weekly wrap up. Do you buy silver and sell it for a gain? Well, I think you have the right attitude. You really want to hold on to it. I mean, it's your insurance policy. But there will be a point where it's overvalued, but what are you going to buy with it? I'd say a lot of people could be looking at buying food. I don't think there'll be a food crisis here if you have the money to pay for it. But how many people are lining up in long lines in their cars to go to food banks right now?
Yeah.
So, I mean, I'm not trying to be Mr. Doom. I'm trying to be very accurate and very sensible and very grounded on what we look to in the future. And it isn't real bright right now.
Well, the driving force back then was inflation. Remember whip inflation now? There's a lot of people who remember this. They weren't even born. And
Right.
you know, when Carter handed off the deficit and left office to Reagan, we had
Yeah.
less than $1 trillion deficit.
Yeah.
It was
Right.
like 900 billion, and people were freaking out, and that's why gold was going up because hey, how are we going to pay this off? Oh, we'll grow our way out of it. Of course, you know that's a farce. You know, now
Yeah.
we're at what, 21 trillion, and then the missing money another 25 trillion. The missing money. Mark Skidmore and Catherine Austin Fitts another 21 trillion. Skidmore saying, oh, there's 90 trillion churned in the bond market. The derivative. We didn't have a derivative markets in the '70s. We didn't have 600-700 trillion in derivatives. What they admit to. Well, the debt out there is a cartoon. Egon von Greer says it's unknowable. Unknowable.
Right.
The risk is unknowable.
Yeah.
I,
Well,
hey, you're
Greg,
talking
I've
about
got
$800 gold, 850, 900, whatever it was, whatever it topped out. This is like that on LSD. This is like that on
yeah.
mushrooms and LSD and heroin.
Right. Well, I've got to wrap it up. I've got a
Okay,
consultation
buddy.
in
Hey,
2
listen. Talk about
I
your.
would like to leave off if I might.
Yeah,
And
hold
I
on.
know you,
Talk about your. I want to talk about your. How this is kind of a religious thing. This will
right.
be worth it. And I want to talk about the Morgan report briefly.
Okay.
What about the kind of I don't know, almost spiritual aspect of silver you were talking about?
Well, I don't do too many public articles anymore. I do mostly, audios and videos. But I was asked to write for this executive review and Silver in 2020 in this magazine. So at the very end of the article, he put in highlights. One of my quotes is the most fundamental fact this writer, meaning me, consistently stressed is simply all fiat money fails. The track record for unsound money is perfect.
Yeah.
And then at the end of the article, I write, to come back to earlier symbolism, silver, meaning the color, means truth by some biblical scholars' accounts. The silver metal is very closely associated in the scriptures with the subject of redemption. Trumpets are closely related to the topic of redemption in the gospel. In Hinduism, silver embodies spiritual enlightenment, eloquence, and encouragement. And then the paragraph starts, it's time to rethink silver. The financial definition of redemption is paying off a mortgage, paying off a bond, or paying off a note. And how would one pay off these items that are largely created out of nothing by a Babylonian system of banking? From a natural law perspective, redemption can mean being saved from sin, error, or evil. At the risk of getting too close to the proverbial hot button for almost everyone, let me ask, with the current circumstances, isn't it time to redeem the monetary system and perhaps ourselves? Is it time to rethink silver and what the meaning is for you? So that's my wrap up there. And as far as for you, Greg, I'm going to offer a 10% discount on my premium service. But I send you a bunch of links that are kind of the most popular educational things I've done over the last 20 something years in the silver market. For free, it'll save you a little time. You want to use them, fine. If you don't, that's fine.
Can
And
you hold on? I'll use some of them anyway. I'm definitely going to use the discount. Can you still buy this Silver Manifesto? Is this on your site?
yeah, I just got 1,000 of them
Oh
reprinted.
man,
So
this is everything you wanted to know
yeah,
about in detail. I mean, you get your money's worth charts and stuff. It's 2000. It's not that old. It's 2015. So give me a link for this book,
yeah,
and we'll do that too. David Morgan, always interesting. We're just getting warmed up in the silver market, and it's something people should be in the buy and hold mentality, a core asset.
yeah.
Right?
I'd like to say one more thing because I get the trolls like you. A bull market is very much equivalent to seeing a bull rider. That bull will do everything it can to get that rider off its back. And you will see these huge moves down, like we saw 15% in one day, that will take weak hands off of the bull. They're off the bull and they're never going to get back on it. The main function for an investor is to hold on to that bull all the way up to near the top of the market and then make their, take their profit or, whatever they're going to do. So be prepared, folks. Markets go up and down, and you're going to see some real scary moves up and down. I mean, I coined the idea that, the silver market will scare you out or wear you out. You can get these violent moves up and down, and sometimes it just goes sideways or down forever. And it's just, I don't even want to hear the word silver anymore. It's just so boring. It's doing nothing. And then out of nowhere, you'll start to see it move, and we are in a move, and it's basically going to be up. But you don't want to use leverage unless you really know what you're doing. And if you want to catch the people that bought, $5 silver, I still think the mining shares are the way to go. I mean, if you look at my silver standard recommendation, that was a 50-cent stock that went to $40. That's the same as silver going from 5 to 400. And so anyone that says, oh, well, physical only, I've always said physical only to start. But if you want the next step, I'm not saying that's right for everybody. There's certainly opportunities in the miners.
The safest way to play it is buying it and holding it. That
Yes,
simply
it
is the safest
Absolutely.
way to play it. But if you want to take on the risk, see, a lot of people can't manage the risk. A lot of people.
I know. No, I get it.
So that's why
And
I'm very leery about telling people to buy stocks, because you got to hold that position. You got to be able to have enough, capital to do that. And I just think everybody should have some gold and some silver. And anyway, David Morgan, the Morgan Report, your publication. There's a 10% discount. It's what, $500 a year, and you're going to give 10%, so it's $45 a month, right, for the Morgan Report.
Right. That's correct.
And there's also free stuff on the Morgan Report as well, the website.
Yeah, just go to the website. Everybody should be on the free newsletter that's interested in the financial system.
Okay, give me a link for that too, the free newsletter. Appreciate it. David Morgan of the Morgan Report, a precious metals expert extraordinaire. David Morgan, thanks for joining us today on USAWatchdog.com.
My pleasure, Greg. Thank you.